Hello, welcome to the Wealthy Trades Daily Market Forecast for June 2nd, 2015. Let's get rolling right away. I want to talk about levels, all right? I want to talk about specific levels we need to watch in the market. And we're kind of doing this whole bump along thing that we've been doing for a while. We haven't really had any trends this almost entire year, all right, for the last 6 months that have really been worth anything. This uptrend here was real choppy back in, at the beginning of the year was real choppy, and then finally in February where we kind of caught a bid, which was nice. But I do want to talk about kind of some of the levels, short-term levels, medium-term and longer-term levels that we need to pay attention to, okay? Because what's happening is, as the market is rallying up, and what it's doing is it's rallying in a pretty orderly fashion, but something interesting is happening, and what that is as we're getting some of these minor pullbacks here, and we've gotten quite a few of them over the last year and a half, as we get those, we put in higher pivot lows. And the reason why putting in higher pivot lows is important is because what it ultimately does is it makes it easier for the bears. It makes the level the bears need to break down much more attainable, much closer. So we need to pay attention to that. But let's talk about on a daily basis, all right? On a daily basis, more short-term stuff. We are technically in a downtrend now. We are close, sitting near the all-time highs. I get that, but because we, closed below those pivots last week, we are technically in a downtrend now. On an uptrend, all right? So every time we're in a trend, you got to pay attention to the counter trend levels, right? So what levels do we need to stay below? If we're in a downtrend, what levels do we need to stay below to stay in this downtrend? Okay, that's what we need to know, because if we continue to break lower, then obviously we're going to stay in the downtrend. So the level on the upside that we need to stay below before we go back into an uptrend on a short-term basis is 212.98. That is the level that we're looking for. If we rally up and close above 212.98, we will then shift back into an uptrend. I am bullish, as I've been saying. I'm not coming off that stance yet, okay? Yet, long term, because we haven't broke did any real technical damage on a longer term basis. The short term kind of blips, we can get over these. I do believe we will eventually see a rally higher. Now, let's talk about more medium term or long term, okay? So let's look at the weeklies. And this is interesting because what I want to do is I want to show you a longer term chart. I actually want to go back and I want to show you what happened in 2007, 2008. Everybody remembers the big, huge, once in a lifetime financial collapse and bear market that we went into. Well, look at this. Wealthy Trades went into a technical longer term downtrend, weekly downtrend, January 2008. And so at the close of January 2008, going into February, the price was 120.85 in the S&P 500. Well, let's say you're a long-only trader. Well, if you're a long-only trader, then you would have went into cash at the end of January 2008. You would have stayed in cash, all right, until we shifted back into an uptrend in June 2009. So essentially, for 6-7 months, you would have stayed in cash. Then you would have gotten back in at 80.33. So you would have missed out on 32% sell-off right there. That's huge. Now, the reason why I bring that up is because I wanted to show where the level is that we need to stay above on a weekly basis right now. As you can see, look at this. Going back to 2007, we don't go into a downtrend all that often. In fact, look at this run from... we went to a short-term downtrend. I don't know if anybody remembers this, but we went into kind of a little bit of it was a pretty aggressive sell-off in late summer 2011. All right, but from January 2012, okay, so from January 2012 through, and we kind of had a minor blip downtrend in October 2014, but from the price of, let's see here, 120 essentially to 195. So we had a run of 195 to 120. So we had a 60% rally before we ever went back into a little bit of a minor downtrend. So watching and knowing where these pivots are is extremely important. So what I want to show you is the pivot so this is kind of the medium swing term pivot, swing trading pivot. That pivot that we need to pay attention to is 204.12. This one right here. This, all right, that was put in place March 23rd, 2015. the way we look at these pivots on a weekly basis is we look for a power of 5, meaning this pivot low, this low has to be lower than the 5 weeks before. All right, 1, 2, 3, 4, 5, and it has to be lower than the 5 weeks after. Well, that one is in fact a pivot low. So the pivot we are watching on the downside is 204.12. That's very attainable for the bears. In fact, it's the closest it's been in a very, very long time. If you think about that, if we're looking for 204, let's say, well, at current prices, that's only 3.5% away. 3.5% away from shifting into a weekly downtrend. And you know what? We had a weekly downtrend in late 2008 that would have saved, if you would have went into cash and you're a long only trader, would have saved you 32%. So I want you to pay attention to that. I want to also show you the monthly pivots. All right, monthly pivots are very, very important. As you can see, we don't shift into a downtrend all that often. In fact, we've been in an uptrend from basically 1/2017. Haven't shifted into a downtrend since 1/2017. So if you're a long-only trader, you've been long since 1/20 and riding this wave up. All right, and you missed out on basically all of the 2008 crash, which is good. But we're getting closer to being able to break that pivot low, okay, on a monthly basis. Now, where is the pivot low on a monthly basis that we need to pay attention to? Well, it is right here in February of this year. We put it in 197.86. Okay, so 197.86 is in fact the pivot low that we need to stay above on a monthly basis before we shift into a downtrend. And again, that is very close. 197.90. What is it? What did I say? 197.86. So let's say 198. So 198. Essentially, we are only 6%. So we're 3% away from a weekly downtrend shift, and we're only 6% away from a monthly downtrend shift. These are things we need to pay attention to. Now, again, I am a bull. I think we're going to get a couple last type of rallies higher before. Yes, I do believe within the next probably 15 to 24 months, we're going to see a renewed bear market. And what is a bear market? A bear market is a 20% correction. Okay, so I do believe we will see a 20% correction within the next 24 months, within the next 2 years. But the thing is you got to remember, I think that we're going to get a rally in the S&P 500 in SPY. I think we're going to go to about 230, 235. So let's say we get to 230. And then we go into kind of a classic bear market. Let's say we get a 25% correction from there. Well, that brings us back down to about 170. So I'm not saying that we're going to get a 25% correction from current levels. That would bring us down to 160. I'm not saying that, but I do think that we will eventually go into a correction. A correction's 10%, and then eventually go into kind of a bear market. But I think that bear market will come from much higher levels, probably about 10% higher. So real quick, I do want to show you, technically speaking, where I think this market might fall to if we do in fact fall. This was kind of the all-time highs in 2008, 2009. Let me see here if I can. I can't get. So all-time highs here, 2008, 2009. Go down. We bump around that level, and then we break out. I wouldn't be shocked. All right, there's a couple levels in here. Let me see if I can get this a little tighter here. There's a couple levels that were set in place in this rally that I think we could probably go to. So let me see. A little higher. Right around this 170 level or so. If we go into the bear market, now we've got to do very big technical damage before I can even get on that wagon. And as I've said, I think we're going to go through a rally first before we even see those levels. So I am not a bear. I think we have catalysts in place that potentially could get us to be bearish. Obviously, all the geopolitical stuff going on, that's always a concern, but that's going to be a concern for the rest of everybody's life. I mean, we live in a world where information travels very fast. So got to pay attention to that. One of the things that we want to pay attention to, and that everybody should understand, is inflation and incomes. Now, here's kind of the oxymoronic thing about where we're at right now is if incomes start to rise, that on the surface seems like a very good thing. Let's say the jobs market continues to be pretty robust and incomes start to rise. Well, that seems like a really good thing on the surface. The problem with that is, as incomes rise, inflation will then start to pick up, which then forces the Fed to start raising rates aggressively, and then what needs to happen is incomes need to continue to rise to keep pace with cost of living. Problem is this: if it's kind of oxymoronic, but if incomes don't rise and inflation starts to rise, which is kind of hard to happen, but it can happen. If that happens, the Fed then has to start raising rates, which means makes the cost of money and cost of goods, everything higher, and now people can't afford it, and we could go through a little bit of a correction there. But right now, we're in a kind of a sweet spot. We don't have much inflation. Incomes are rising slow, but you know what? They're basically keeping pace with inflation, and money's cheap. So it's kind of a sweet spot right now. But let's talk about what we're doing for today in the dashboard. We're in a downtrend, but the trend quality is below 50%, so therefore we do not want to take just an aggressive bearish position. So we're going to do a pairs trade. The XLB is the worst sector, or the best sector to short in. All right, that's the material sector. So let's find the best stock to go short in the XLB or the material sector. So I'm going to move all these stocks. These are the best 8 stocks, and it's based on how often they hit their trend side. All right, their trend side, the historical rates of hitting their trend side. So I'm going to move all those into my portfolio. All right, I'm going to eliminate anything that doesn't make money on both levels to win profits. So MLM, for example, closed 147.06. It has a downside trend side because it's in a downtrend of 145.43. But here's the thing: when it hits that historically, when it hits that level, it hits it often. All right, it hits it 53.8% of the time, which is more, more than half the time. So that's good. But when it hits that, it typically closes higher. I know that because levels to win profit. And if it's in a downtrend, we want it to close lower and make money there. So I'm going to eliminate anything that doesn't make money on both sides. So it's got to make money on both these levels to win levels. So I'm going to flip through this kind of fast. All right, eliminate ECL. And okay, so there we go. Now I'm going to use the next filtering technique is going to be looking at the levels on levels, spread. So I want to see a wide spread. What this indicates is how often price sells off and closes below this level. All right, that's the trend level. So I want a high number here. And then how often it rallies and closes above this level. I want a low number here because we're in a downtrend. So I want a wide spread. All right, this spread is 25%. That's good. Well, that's better than 11. All right, that's better than that one. It's better than that one. That one's about 21, so not quite as good. This one here, what do we got here? 35. So that one's better than that one. So ATI is the way to go. So what do we know about ATI? Well, we know it closed at 32.08. Has an expected downside of 31.46. It hits that. Look at this. It hits it 63.5% of the time. It's a really high rate. It only hits the counter trend side, which is 32.58. It only hits that almost 27% of the time. But it closes below this trend side level almost 50% of the time, 46% of the time. That's huge, and it's profitable on both levels. ATI is the way to go. There's actually 3 entries in ATI. You can enter short at the open, and then shorting at these 2 levels is really good too. But remember, we're not going to just go blindly short because the trend quality is below 50%. So we're also going to pair that with a long position in the best sector. The best sector, now remember, these are ranked from left to right. The best sector is the XLV. See, it turns green, qualities, and it's based on the quality. Quality is 52.5, while the quality in the XLU is only 51.7, and XLK is 50. So XLV is the best sector to go long in if you're a long trader. So I'm going to look for the best long opportunity to pair that short with. So I'm going to move these stocks over into my portfolio, and we're going to find our best trade for today. And as you know, for the week, we are long UNH, short SWN, doing a pairs trade because the XLV is the best sector and the XLE is the worst sector, so we want to do a pairs trade because the quality is below 50%. But I'm going to flip through this kind of quick here, find the best long opportunity. Here, I'm going to eliminate anything that doesn't make money, do the same exact thing that I did on the energy sector. Okay, so 32 and 19 isn't as good as 26. My computer's running a little slow here. Actually, we can eliminate AT. Okay, so 32 and 19. So that is, what do we got here? We got 17, and so UNH is better. UNH is better than that one. Again, just looking for the best long opportunity here. If my computer would stop running slow and weird. 28 and 11. These ones are pretty close here. Well, 32 and 13 is better than both of those, so CAH. And 34 and 9 is better. So ACT is the best long position. So what do we know? We know ACT is the best long position for today. All right, closed at 309.19, expected high is 312.52. Hits that often. The spread between the levels on levels is good, and it makes money on both sides. So what we're going to do is short ATI at the open. That's the best shorting opportunity today. The best long opportunity is ACT. Pairs trade. Close both of these at the end of the day. Again, on a weekly basis, we did a pairs trade. Long UNH, short SWN, and then the monthly, it's simple. XLV is the best sector, and actually the XLV is the best stock overall to be in also. So sorry for the long video today. Hopefully gave you some insight on some of the levels that we're looking for in the S&P 500 on the downside. All right, so for those longer term weekly and monthly, we're looking, again, like I said, at 204 on the downside for kind of the weekly, and then 198 or so on the monthly. So don't think we're going to get there real fast, but it is important to pay attention to those levels as we kind of get a little closer. So let me know if you have any questions. You can email me, info@wealthytrades.com.